Good afternoon, ladies and gentlemen. Welcome to the eStar Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company can review all questions today and will publish those responses where it's appropriate to do so. Just as a caveat, Alex is presenting from Kazakhstan and the connection is slightly intermittent this afternoon. That said, I'll hand over to you, Alex, if I may. Good afternoon.
Thanks very much, Mark. And let me start by saying thank you all for joining us today, allocating some of your precious time to eStar. I'd like to give a short presentation on eStar to update you all on the work we've been doing and the work we're going to be doing in the near future. And specifically just to remind, investors and potential new investors of what we still very much feel is an outsized risk-reward profile of the company. I'm going to do this by reiterating that eStar's an exploration company. Our job is to find commercial deposits of natural resources worth considerably more than the invested capital. And to date, eStar's already done that in spades. Before we get stuck into the presentation, however, I'd like to address something that I think is probably on a few people's minds, being ultimately the Vakuba process, which we've been running throughout the course of this year. So we initially announced in March that we had intended on running a process on Vakuba. eStar was drawn into that process arguably prematurely due to an unsolicited offer that was significantly more than our market capitalisation at the time. That's a true statement at 3.5p as it is today at 1p, even after the capital raising. Unfortunately, it was with conditions and counterparty risk that the board ultimately weren't willing to accept. We advanced and passed technical due diligence with a number of other parties and have since, especially since the 4th of June update, received further interest in conducting due diligence from at least 4 other parties, the most recent of which was last week. And so we still see this process very much as incomplete and ongoing. That said, the management team and board, as was highlighted in the quarterly results, have decided that despite the continued progress in this process, the company doesn't want to continue to be beholden to the timings of third parties. We feel that if we want to achieve a value that provides a greater outcome for all shareholders with timing determined by the company, then it's prudent to spend incremental funds to advance the project, as is the job of an exploration company. This is why I continue to invest in eStar and have done again so in the last raise. This is why our directors, major shareholders, have continued to invest in eStar, and also why we're able to attract an investment from a very large mining-focused fund, typically which doesn't invest in this market cap range. So reiterating again, the risk-reward, outsized risk-reward return profile hasn't changed. It's as true, if not more so today, than it was in March of last year when we were trading at 1.5p and announced that process. So to that end, let me go through the presentation and then, of course, seek to try and answer your questions at the end. My name is Alex Walker. I'm the CEO of eStar Resources. eStar is a Kazakhstan-focused copper exploration company. In summary, since the beginning of this year, we've started to adjust our strategy to become primarily a copper-focused, primarily almost entirely a copper-focused explorer. We have a real first-mover advantage in Kazakhstan, which changed its mineral law in 2018, and we pegged our first licenses in 2020, along with the state mining company Talcan Samruk, at the same time that groups like Fortescue Metals Group came into the country. We have a 3-pronged copper exploration strategy, which I'll go through shortly. And in 3 short years, we've already been able to attain more than 230,000 tonnes of contained copper in a JORC resource, with multiple targets across our 3 strategies. This year, we were a recipient, one of only 6 recipients from nearly 600 applications for the BHP Explore program for our copper porphyry strategy. As far as the shareholder register goes, this is up to date today, but subject to the capital raising, directors will hold around 15% of the company. The major shareholder, Ilwella, will hold around 16%, and the new institutional investor will come in at about, I believe, about 6.5%. As I mentioned, have participated in this raise and every capital raise to date, and will continue to support the company as much as I'm able to financially. Next slide, please. Am I doing this? Sorry. There we go. A little bit of a reminder about Kazakhstan. It's an existing major producer of copper, uranium, and gold. I think a lot of you will know this about Kazakhstan at the moment. Potentially some of you will be completely sold on the jurisdiction as an operating jurisdiction in terms of its cash costs, but have questions about a few other geopolitical maneuvers that have happened over the coming years, over recent years. What I'll say to that is Kazakhstan has done an unbelievable job of not attracting any sanctions to date, nor would we ever expect them to, whilst also remaining friends in the best way possible with all of its bordered parties and those that don't have a border. So it takes 1/3 of the amount of time to transport goods from China to Europe through Kazakhstan than it does by sea, which is the reason that Europe is investing 11 billion euros in the Trans-Caspian pipeline and infrastructure route. China, Europe, America, and Russia all have a vested interest in an independent and successful Kazakhstan, and we very much see the company maintaining that level of independence, and also that higher level of foreign direct investment coming into the country, which is just seeing more service providers and more support for people like us that are doing our work on the ground. In fact, this year, we've had First Quantum peg a number of licenses in Kazakhstan. We've had Barrick set up a corporate office. B2 Gold have also set up a corporate office, and Teck have come into Kazakhstan partnering with a Canadian-focused company in the Pavlodar region to the north. So what we're seeing is increased interest, increased foreign direct investment operating in Kazakhstan, and we truly believe that our first mover advantage is really coming into play with the interest that majors have shown in us and the work that we've been doing. A quick summary on the 3 copper strategies. From east to west, to east on the right-hand side is the VMS strategy, where we have our JORC inferred resource. That's the Rudny Altai volcanogenic massive sulfide belt. In blue, in the center of the country, in particular the dark blue, we have the Balkasheli magmatic arc, which was the subject of our porphyry work with BHP Explore. And a little bit further to the west, in the center of the country, we have the 2 large sediment-hosted copper basins in the Chusari-Su to the south, which hosts Jezkazgan, a 22 million tonne of contained copper deposit, and in the north, a slightly earlier state basin in terms of exploration, and that is the Teniz Basin. And those 3 are our 3 areas of focus for the company. A quick piece about the copper market, and literally in the last 3 weeks, copper's gone from about $9,200 back to $9,800, $9,900 a tonne, and it was there briefly before. The critical thing to consider here, and you could have strong views in any which way on EVs and whether or not the uptake on EVs is going to be enough and so on, but to drive this copper demand. However, I wouldn't even put it down to that. The reality is that the world needs to rebuild, not just Ukraine, but the world will need to rebuild itself. We've got aging infrastructure that continues to have a need for copper demand. We now have AI data centers that have significant copper demand, and we have a new requirement for infrastructure for the green energy transition, which isn't just about the EVs that we need to build that has this huge copper demand, but it's about literally transporting that energy from whatever wind power, solar farm, nuclear power plant to the grid. And all of that is incredibly copper intensive. And so we are in a position where copper is a highly inelastic commodity, where we cannot switch on supply to meet that demand, and where we are very lucky if most of the best mines in the world are making any money at $4 a pound, even up towards $5 a pound of copper. So we're in a very, very interesting position for the next 2 years, 3 years, 10, 20, 30 years in terms of copper demand. And most specifically in terms of copper concentrate, where the smelters are significantly under supply. And a good analogy here is that copper users are pulling up to the petrol station and they're the car owners, they're filling up their car at the petrol station and the pumps are full. However, there's nothing that's coming into that supply line to refill those pumps at the petrol station. And so despite the fact that we see $9.5 to $10,000 a tonne copper today, as we start to, as the world and copper users start to realise that supply line is empty, then we will see some pretty significant shifts in the copper price. So we're incredibly bullish on Kazakhstan. We're incredibly bullish on copper. And of course, we feel the best way to get exposure to both of those is via E-Star Resources, three-pronged copper strategy. The first strategy most of you will be aware of is the Rudny-Altai volcanogenic massive sulfide belt. What I want to reiterate on this slide is just how infrastructure intense this area is. This is infrastructure-led exploration at its best. We have ample capacity in a number of mills in the region. The Bulazovka plant to the southeast is on care and maintenance currently, holding 600,000 tonnes of spare capacity. To the northwest, we have the Nikolovskoye plant, which has around 800,000 tonnes of spare capacity. Kaz Minerals currently produce from Irtishki and Artemyevsky, feeding that plant. Irtishki, they crush on site, truck to the railway line, rail through our licenses, back on a truck and into the plant. And as it stands today, that mine may only have another few years left. I know that they're investing to try and extend that, but 2 to 3 years is not unlikely to see that shut down and that capacity extended. We've got roads, power, water at the Vakuba site, and we are literally 90 minutes from the town centre of Usk-Kamenogorsk, which has an international airport. It has a smelter. It has ALS labs, which do assay preparation and everything else we could need. So it's incredibly infrastructure intense, which of course leads to low operating costs and low capex because there's a huge piece of infrastructure which we will not need to put in place. A little bit about the Vakuba deposit itself. Again, E-Star put a JORC inferred resource on the Vakuba deposit in April of this year. Now, that was off the back of 46,500 metres of historical drilling principally and some of our own drilling. And just to remind everyone of the history on Vakuba, we didn't buy this asset. E-Star uncovered this asset through data acquisition and applying for ground in areas where we knew there was historical deposits in place. What we then did was we spent a year collecting and digitizing a lot of that data, and we handed that to an independent consultant, said, look, before we talk about Vakuba, is this something that we want to chase up? Is this something that we legitimately want to spend money on? And this is a process that the board, the management team, and its independent advisors continually reiterate with every new piece of data that we find. Is this something, along with all of our other licenses and prospects, is this something that's worth us spending money on where we expect to get an outsized return on our investment? And the answer at that time and to date has been emphatically yes. AMC consultants put an independent JORC exploration target on it of 19 to 23 million tonnes. They'd also put a net present value pre-capex of $240 odd million. And that was when copper was $9,000 a tonne, based on an open pit only scenario. Since that time, we've drilled the deposit, we've done topographical surveys, we've done a number of geological surveys, and we've uncovered more than 70 of the historical drill collars. So we've refined our geological model using our own drilling results and the historical ones. We were able to put a JORC inferred resource, which, as I said at the start, has more than 230,000 tonnes of contained resources. Our intention now is to improve that. And again, not being beholden to the timing and whims of independent third parties. It's our view that the deposit has the potential, despite the fact that it's already a very good deposit, which I'm quite happy with, it does have the potential to be better. And we need to try and assess that, both in terms of improving it from our own geological understanding and seeing if it does improve in terms of its tonnes and grade and so on. The reasons to believe that the tonnes might increase is to do with the fact that the drill spacing is fairly wide to date. And therefore, if we infill that drilling, then potentially we can get some of the ore lenses which currently don't connect to connect. And the other reason, or the other two reasons, are historically our drill results from our own drilling these days had far better core recoveries than they had historically. So we get close to 100%, whereas they used to get around 50 to 70%. And so our ore intersections are typically wider than the historical ones. So we feel that as we replace the historical drilling with our own, then we will get better geological certainty, and there is the potential that we'll get increased tonnes into a mine plan. The last part is just the upside of Vancouver. We believe that it's ultimately a turbidite flow or a subsea floor replacement style deposit. And what that means is it's distal to the VMS ore body. It's just distal to the original source, which was pumping up out of the ground and ultimately dispersed copper and lead and zinc over different lithologies, which is why we're seeing some other sedimentary layers in between our lithologies. So to that end, there is a source, and we would like to be able to find that source. So that's some potential quite significant upside for what the Vancouver deposit could be. I've mentioned before we've got multiple development options. You know, we feel that even as an independently developed prospect, this still has a very, very likelihood of being incredibly low capex, as with lots of mines in Kazakhstan. A little bit more about our exploration, which we've spent the vast majority of this year on in terms of our team has been out in the field further validating our geological targets. So these targets were derived from our EM survey from 2022 principally, and we've been reviewing historical data, drill results, and getting on the ground taking samples. And we're not just taking samples of the areas that look interesting to us. We've also been up and down the entire belt around 120 kilometres of the belt. And we've taken samples from the current and past producing mines in the region. And what that means is we've got what we call a lithogeochemical fingerprint. We've got something that says, this is what this mine looked like. And therefore we can use that as a targeting strategy for our own areas to say, well, Nikolskoye East, for example, is taken from the same rock package as Nikolovskoye or Adamyevsky. Okay, thanks. So just reiterating that BHP were 1%, i.e. one of 6 recipients of nearly 600 applications in the BHP Explore program for 2024. Now, not only was that significant because, well, the $500,000 that came into the company made us cash flow positive for the interim period of January to June 2024. We, in fact, posted a £9,000 profit for that interim period. But it allowed us to do a number of other things. We purchased a huge database, both for all of Kazakhstan and more specifically use that database for targeting work for copper porphyry exploration. But it also allowed us to build our team, bringing on Tremaine, bringing on as our exploration manager, bringing on Chris as a technical director. And it gave us the geological firepower and the processes to now be able to expand significantly in terms of what we can do for our targeting. So the next two parts of the strategy, the copper porphyry exploration strategy and the sediment hoster strategy, not only can we execute that because of our database and because of our geological expertise in-house, but we can execute it from the perspective of East Star being a company which can demonstrate operational expertise in Kazakhstan and the ability to increase our investment and to manage a much higher level of investment than we currently do. And that's been reiterated to us consistently by BHP and now as we speak with other majors about potential to work together in Kazakhstan. I won't go into too much detail on the copper porphyry and the SED-hosted copper other than timing. You know, the work that we did as part of this strategy was immense. What I've had people ask about having Chris Van Wyk on the call. Unfortunately, it's past his bedtime today in Perth. But what I think would be a good idea would be to, in fact, do another IMC presentation perhaps during the day in the UK, and he can actually run through these strategies in a little bit more detail in the work that we've done. But needless to say, we've broken down a belt that's more than 200,000 square kilometres in the porphyry strategy. And we've refined our targeting to over 120 targets, but we've clearly ranked those, and we've got our top 20 targets, which we believe we can take forward and ground truth. We have had a number of inbound and outbound levels of interest in the work that we're doing here. But the goal will be to spend money efficiently to de-risk these prospects as much as possible without turning it into a significant burden for shareholders to wear in terms of exploration. And so it's quite clear the timing on these when they ramp up in terms of their exploration costs, drilling, of course, but potentially even before that for the geophysical surveys and even the soil sampling surveys. But our intention is to take these forward as much as possible and then risk weight each decision as they come. But there's no doubt that we're in a belt which is drastically underexplored, which hosts tier one deposits like Actagai and Kunrad. And in fact, Actagai is in the lowest quartile of production costs globally. And we believe that we have the potential to find additional ones of these. I could almost repeat this concept for the sediment-hosted copper. The one thing I'll add is I'll just remind investors of Chris Van Wyck's resume. So Chris was the head of sediment-hosted copper exploration for First Quantum, arguably the or some of the most experienced sed-hosted copper explorers in the world. And he ran that strategy for them for a number of years and, in fact, wrote their targeting strategy. The work we've done in Kazakhstan on this very much replicates the porphyry strategy. We have our refined target areas, and now it's a matter of just timing with regards to when we pick up licenses and the work that we do to advance those. Again, understanding the risk reward on spending investors' capital on these greenfield prospects, as significant and large as they are, we'll need to risk reward weight that at the appropriate time. So this is the new enhanced team since the start of the year. Myself and Tremaine are based permanently on the ground in Kazakhstan. And Chris has come to Kazakhstan, I believe, about 4 times this year already. And the rest of the team just demonstrate our capacity to operate. We can pick up and drop ground. We can get all of our environmental approvals. We get all of our landholder approvals, servitude, and everything else that we require to operate. We do it quickly and efficiently, which ensures investors' money is spent effectively in the ground as best as possible. It also means that we're a company which don't sit there and land bank and rest on the potential just to peg large areas and talk about the size of our land package. We want to pick up licenses, assess the quality of them as fast and as cheaply as possible. And if they don't advance in a risk-reward basis for us, then we're happy to drop them. And so that's something which I'd like everyone to understand and take forward, that's the job of an exploration company, is to assess these opportunities as quickly and cheaply as possible. And if the risk reward is outsized, then we continue to spend money on that reward profile. And so there we are. I'd like to thank you all very much for spending the time listening to us today. Just before this call, I received a very interesting visual on a cost, copper cost per pound in the ground, and it's all the major copper producers of the world. And in the top top 5 mines, 4 of them are Kaz Minerals and Kazakhstan mines. And in fact, in that visual, there's only 1 mine in America, and 2 mines in America and 1 mine in Canada as part of portfolios of major companies. So despite the fact that that's not, free cash flow per asset, it is very indicative of the low operating costs in Kazakhstan, and a significant reason why we're there, why we continue to say that our assets have the potential to be very low cost, both CapEx and OpEx producers. And we have demonstrable reasons as to why that may well be the case.
That's great. Alex, if I may just jump in there, just give you a time just before we go into the Q&A. Thank you very much indeed. If I could please ask investors to continue submitting your questions, just use that Q&A tab situated on the right-hand corner of your screen. But just while Alex takes a couple of moments to look at the Q&A, I'd just like to remind you the recording of this presentation, along with the copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Alex, if I could just ask you, on the right-hand side of the screen, I'm hoping you can see chat, Q&A and polls. If you click in Q&A for me. We've had a number of questions from investors today. Thank you to everybody for your engagement. And Alex, if I may just hand back to you just to read out the questions where it's appropriate to do so, and I'll pick up from you at the end.
Certainly. Thanks, Mark. Question number 1 is, do PHP have any plans to follow up with support for exploring the porphyry deposits? Not at this stage. They don't. We are in discussions with a number of, well, let me rephrase. We've had very early conversations with regards to the work that we've done through the BHP program, but I can't tell you that we are in discussions today specifically with BHP, specifically on that program. Can you share any preliminary findings or indicators that suggest the potential for additional resources beneath the current Fukuba deposit? And what specific geological evidence has led you to believe there might be more significant deposits? The evidence is largely around the fact that the deposit is the style of the deposit, which we believe to be a distal VMS deposit, obviously akin to the fact that there are a large number of significant VMS deposits in the region. We do have things such as IP anomalies and EM anomalies on the rims of those deposits, which don't appear to have been tested. These are EM anomalies, and so the quality of them is hard to assess. What I expect we'll be doing as part of our exploration program, as part of our drilling program, is some downhole EM, and hopefully we'll be able to refine those targets. Can you confirm what geological studies or exploration techniques you plan to employ further to investigate the subsurface beneath Fukuba? What are the specific methods? I think I've just addressed that. Drilling and downhole EM are the two most specific methods which we'll be using for that. Have we any immediate plans for drilling at Fukuba? Yes, we do. We've been prepping ourselves for a winter program. I've said in the past, drilling is harder in winter, but it's not impossible. However, we believe that we would like to progress that as quickly as possible. And so we are in discussions with drilling companies to find out how quickly they can actually get to site. I can't make any promises at the moment on the time frame until I've signed that contract with the drilling company and confirmed their expected anticipated mobilisation dates. That's the point in time that we will be updating the market on that. But I will say that we would like to be doing it. Our intention is to do it as soon as possible and not wait until May next year. And we have already done the long lead times items for that in terms of preparing ourselves, what we can control, our sheds, our core cutting facilities, our core logging facilities for winter operations. Based on any current resource estimate geological modelling, how much do you believe the resource could grow as a result of ongoing exploration? What are your targets in terms of increased tonnage or grade, and more to that effect? What I would say, is there a clear cost benefit that you share to indicate how the risk is worth the cost to the company and dilution to shareholders? In answer to the first part, no, we can't give specifics on modelling. The whole point of drilling and exploring is to decrease the risk in an asset by increasing our geological knowledge. So I wouldn't want to second guess the geology. I've explained in the presentation 2 reasons why perhaps the resource could grow in terms of connecting ore bodies, as the drilling currently is too widely spaced, and in terms of hopefully having thicker intersections, because our core recovery today is better than it was 50, 60 years ago. And then there's the potential just for a larger resource if we do find a massive sulfide or lens, for example. So they're the reasons to hope that it's going to increase, but there's no guarantees there, and I certainly wouldn't want to be putting numbers on what that could look like, because that would be quite spurious on my behalf. How the risk is worth the cost to the company and dilution to shareholders. I mean, that fundamentally goes back to what are we doing here? Why do I continue to write checks for eStar? Why the major shareholders and new funds come in, and other people in high net worths in London who are very familiar with the mining space. The reason is that this is our job. Our entire modus operandi is to invest our money, investors' money, with the aim of achieving a result being an asset that's worth a considerable amount more than the capital invested. We have done that. We have done that by investing at around $5 million, less so, in terms of all-in capital raised, into Kazakhstan. And we have an asset with $2.5 billion worth of copper in the ground. What we don't know is how much of that is economically extractable yet. So we have been very successful explorers to date. We will continue to be successful explorers, I hope. And the moment that we spend incremental money on these assets and the reward is no longer there, as in the risk is outsized to the downside, we will cease spending money on that asset. And that goes for Vancouver, and it goes for every greenfields asset that we have in the portfolio. That is our job. We've done it well to date, and we'll continue to do so. How will you be testing the impact of your understanding? I think a lot of this is around Vancouver, so I might skip a couple of these around the geology. Further metallurgical testing be required. Yes, metallurgical testing will be required. Our intention through this program will be to get enough core to undertake the equivalent of a scoping study, potentially pre-feasibility study, but hopefully scoping study. So to that end, we'd want enough core to be able to assess it for ultimate recovery and basic understanding of the process flow sheet, which will give us an understanding of the CapEx required to put this into production. It'll also give us a view to whether or not we can toll treat using existing mills in the area and the cost of that toll treatment. So what type of ore will be put in a truck to drive to another facility and how far, because that's going to be a massive indicator on the potential economics. Can we provide a timeline for when we expect to have a clear understanding of the potential beneath the current deposit? There seems to be a lot on the upside of Vancouver, which I appreciate. And I want to reiterate that we feel that there is upside, but I also want to reiterate that our principal job at the moment is demonstrating the economic viability of this project. Typically through the course of these processes, and I guess this is addressing the concept of the Vancouver farm out or sale process in itself, is that you have a net present value for a project which will change. It'll go up or down as the course of de-risking takes place. You invest additional money in drilling to get geological certainty, in metallurgical test work to get recovery and process flow sheet certainty, and in engineering to understand the size of the pits, the strip ratio, whether or not you can go underground, when, at what price, at what time. And so that's all work which you do iterations of throughout the process, and you incrementally do more and more of to get a high degree of certainty. With the concept being, once you're in production, you are at or above the net present value of your project. And everything before that, you receive a degree of discount. And obviously, the earlier you are, the bigger discount you have to that net present value. So we will be undertaking that work. And at some point in time, there is a potential that the paths will cross of the upside, the appropriate discount we should receive for being earlier stage, for not being in production, essentially, and the discount which someone is willing to pay for that, or partner on, or take the project forward. So that's what we are doing as we go through this process of partnering. I would like to see, and I believe there is the potential to have, an absolutely significant outsized return for invested capital to date, based on what we hope to achieve from that money versus where we currently are as part of offers in a process. Okay, the next one's with regards to finding more information at Vancouver. larger resource beneath Vancouver worthy of moving away from a deal? I think I've probably just answered that with regards to the decision tree that the company will take. And it's an ongoing decision tree. It's not move to this point and see what happens, move to this point and see what happens. We continually assess opportunities. What we don't want to do is be beholden, which ultimately we did for a portion of this year. We were beholden to the timing of counterparties, and I believe that was to our detriment, and we don't think that we should be in that position anymore. So we would like to see this move forward, and as we feel that value increases as we do that. Reflecting on the challenges faced this year and there being a pattern forming or missing stated objectives, what lesson has the management team learned that will inform your approach moving forward? Well, I guess firstly, I'd like to say that I think a pattern forming is a pretty significant and unworthy overstatement. We've discussed the Vancouver process already throughout this call, on which there were only 2 announcements this year. And this comes back to our revised strategy of not becoming beholden to third parties, which is the entire benefit of having a 3-pronged copper-focused exploration strategy that allows us that flexibility. What I will say is managing expectations as a junior company is incredibly difficult, quite frankly. We have disclosure obligations to the market, which we obviously meet, and we try to meet our genuine expectations from a management team and a board. In some instances, those expectations are wrong, despite often me adding significant extra time and into what we expect to be a relative outcome. But we try to inform the markets using management's best guess with regards to certain likelihoods. At no point in time have the company put forward anything we believe to be misleading, or certainly not in what we very much felt at the time was the most likely timing and outcome for shareholders. But things aren't always perfect, and that is the life of a junior company, unfortunately. I don't intend on changing anything with regards to our strategy. I think we've been very forthright, and what hopefully we'll do is we'll be more communicative, because we will literally have more news flow. As we invest in these projects ourselves, we will have the news flow of that work that will be coming to the market. And this year we've had slightly less of that, despite the fact that the field team has been out taking lots of sampling. It's not specifically RNS newsworthy every time we take a copper sample and we get more geological knowledge of each independent exploration target in the portfolio. Are there any specific types of partnerships you are considering to enhance the development of the Vancouver deposit or other exploration types? I've said in the past that the only offers we had were for a 100% sale, and that was problematic because quite clearly we felt it did not value the project appropriately on a risk-reward basis for us. So we're open to all partnerships, but the value needs to be considerate of the type of partnership. So what's being taken forward. I might even give you an example of that. One of our concerns was that someone would buy this project for what we felt was a fairly low sum, and then spend absolutely or very little money putting it into production by going through the process of feasibility for not too much capital, and then toll treating with one of the local providers. So in essence, we might be giving away an asset worth hundreds of millions of dollars. And please don't quote me on that number. I want to be very clear that that it has the potential, but not demonstrable potential with the work that we've done to date, other than, of course, the figure that AMC put on initially as part of their JORC exploration target. But we were in a position where that could have been the case, and we end up selling an asset for significantly less. And for us, that's not the job of an exploration company. That's not the risk-reward profile which we give to investors, which is invest in us, and we'll do our hardest to get you a significant multiple return on your capital investment, not 20%, not 30%, because you can get that with, quite frankly, significantly larger and less risky investments. So for us, that's the risk return we want to deliver. We believe we are doing that in the best way possible. All right, the next one's completely about Vercuba. I believe I've answered that in enough detail, so forgive me, but I'll skip that. Are there any updates regarding the work done with GE Tech? There are. They've completed the work. We are not providing the detail of that information to the market because it's commercially sensitive. So until such point as we've secured those opportunities, we will probably stay fairly quiet on that GE Tech work. And I hope that you can appreciate that. Given the strategic shift towards a copper focus, do you foresee adding new licenses or further diversifying your geological focus within Kazakhstan? I always would hope to add new licenses, Peter. What we want to do is we want to add licenses based on increased geological understanding. I'll give you two examples of that. One of the data sets which we purchased through the Explore program was satellite spectral imagery of almost the entire country. Well, it was the entire country while we retained the database, and since then we've downloaded about 3 terabytes of data so that we can retain it without continuing to pay the service provider. Using that data set, that's been one of the major ways we've been refining our porphyry targets, using these significant alteration footprints for these silica lithocaps, which are the major indicator for hydrothermal fluid and alteration within that area. So yes, I would like to see us applying for licenses in the porphyry space. The timing of that, again, is critical. When can we get on the ground and do the work? Do we apply, do the work as quickly as possible, drop the ones that aren't showing the prospectivity? We can't apply for 120 licenses. Even applying for 20 can be a semi-costly exercise, and so we need to try and limit that down a lot further. And we've got more work that we can do, we feel, without losing that opportunity in the short term, but it lowers the cost of getting to the same result.
Alex, thank you very much indeed. If I could please ask investors not to close the sessions, we now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will take a few moments to complete, but I'm sure it'll be greatly valued by the company. On behalf of the management team of eStar Resources PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.